finally we've got some good news. What's going on YouTube? Taylor Prentice back here with another video. In this video I'm going to be talking about some stuff that's going on in the stock market right now, and it is the last week of April going into May. So right now, obviously you can tell by this headline, the NASDAQ has had its worst month since 2008. It's technically not over yet, but it's on pace to do so. So right here it says, the NASDAQ composite, heavily weighted with technology stocks, bore the brunt of the damage this week, ending April with a 13.3% loss, its biggest monthly decline since the 2008 financial crisis. So obviously this is not something you want to hear, especially if you're someone who owns a lot of big tech companies. People have seen those as more of the safe stocks here in recent years, so seeing those take a big fall is kind of showing you that nothing is really that safe in the market, and I'll dive into that a little bit deeper when I start talking about Tesla later on in this video. But with that being said, I think there's just a lot of fear out there in the market, and people are really straying away from companies that are either not profitable or just aren't reporting great growth or just like amazing numbers in general. Like even Apple reported really good numbers this quarter and last quarter, and they gave like some worries and guidance about future quarters for like supply chain reasons. But as far as it goes, they've done phenomenal, and their stock even dropped here today like 4%. So shows even if you're doing really well and beasting, there's still not safety for your stock. Pretty much every company has dropped here recently, and I don't know when it's going to end. Right now I'm just like a heavy buyer of stocks, especially ones that I really love. So I've been just kind of loading the boat, and I think we are kind of gearing up towards a recession, at least it seems that way. People are really scared, especially in the stock market, and no one has a crystal ball, so none of us know when this little crash or whatever is going to end. So the only thing that I can think to do is just keep buying companies that I love and get as much money and as much ownership in those companies as I can while stocks are really low. So as long as things keep dropping, I'll keep buying, and if things like all of a sudden turn around and shoot back up to all-time highs, well then that's great. But right now I'm kind of scooping up things at all-time lows. So I was buying stuff close to all-time highs, so it's like, why would I not go ahead and buy these stocks when they're way cheaper? And yeah, I'm not selling anything. I'm not gonna like solidify any of my losses. That always blows my mind when people like lose a bunch of money and then decide to sell. It's like, how much worse could it really get? Obviously I think there's still some pain that could come, but at the end of the day, I'm not going to bet on that pain lasting forever, and I'm not going to sit on the sidelines while stocks are at really good deals, in my opinion. So I'm going to keep buying stuff. I know like some people are saying right now is just a time to hold cash and kind of wait to see what happens, but in my past history, I've kind of had times where I wish I would have accumulated more stocks when prices had dropped for a certain amount of time, because you never know how long it's going to last. So I highly recommend just building your ownership in stocks that you really love during these types of times. And yeah, going into more of like individual stock type of stuff, Robinhood cut 9% of employees. Obviously a horrible thing to hear out of Robinhood. They've been really struggling. They've had loss of users, they've had just bad numbers in general, and I think bad things are going to continue for Robinhood, especially while the market's kind of in this phase where they don't want to bet on companies that aren't profitable. Obviously a lot of Robinhood's success was kind of from investors and stuff, and right now they're definitely straying away from these types of stocks that are having weak numbers and weak growth. And I actually use Robinhood. I know a lot of people like talk bad about it, or like talk about how more advanced investors should use different platforms, and I actually have a couple other brokerages, but Robinhood is what I got started on, and it's the easiest to use, so I'll continue to use it. But yeah, as far as investing in a stock, I am staying as far away from this one as I can. Just seems like nothing is really working out for them, and they've just got so much competition. It's really hard for them to keep up. And yeah, I think this one is going to continue to struggle for, I mean, as long as I can see. I'm curious to see if they like ever catch a break anytime soon, but for me personally, I don't see that happening. And moving on, we've got some weak Amazon earnings, which kind of spooked the market. Obviously, like as I was saying, people kind of think we're heading into that recession, so people have moved their money to the safer stocks or whatever. But Amazon is a good company to look at when you're thinking about the economy overall, because obviously Amazon sells so many products, and if Amazon isn't having great numbers, then that kind of is indicative of the rest of the economy, because they sell literally everything, so people buy like everything from them. And if everything is down, there's one common thing, and that's just people are afraid to spend money right now. And that kind of goes for all stocks. Like I was saying earlier in this video, tons of earnings have came up short or just been bad earnings flat out, and a lot of them have gave bad guidance for the upcoming months. So a lot of this is just hinting at a recession, and just fears and fears and fears is kind of what everything is leading to right now. Obviously Amazon is going to be great long term. Like, they're still a beast of a company. They're, I mean, one of the best companies in the world. But yeah, bad news for them short term, and I think their stock actually took a pretty big hit today. I'm not sure of the exact numbers. I'll put a picture up, but I think they'll be fine obviously long term, but this could be indicative of bad things for the total market over the next coming months or quarters at least. So I think this is gonna shape up to be a pretty long year, especially if like companies like Amazon aren't doing great numbers. It's gonna be a long year. And then finally, we've got some good news. Facebook shares spiked on their better than expected quarterly earnings. So I'm a big Facebook holder. It's actually my biggest position. They finally had something good happen. They've reported like pretty solid numbers for what was expected from them, and their advertising was down a little bit, but you can kind of expect that because if consumer spending is going down, companies aren't going to spend as much on advertising to get no money back. So that could be expected. And as we go into the next couple of quarters, I think maybe the ad revenue will continue to kind of fall, but I think over time they'll be able to get those levels back up and to make more profit off of those, especially as they kind of maneuver through all these restrictions that Apple has placed on them over the last couple years. But I think their ad business is going to be perfectly okay. I think just right now we might see some down numbers over the next couple of quarters, but they actually beat on earnings per share, and their revenue was down a little bit as, like I said, just people are spending less money. Their daily active users was up, which is a good sign. They barely beat on that though, but I mean, growth as expected is pretty good for them because people expect them to grow pretty rapidly. And then monthly active users is actually down a little bit in consideration of expectations, but I think daily users is definitely more important than monthly users. I get on Facebook like maybe once or twice a month, but I know like my dad is on Facebook like every single day, so it's definitely like an age gap thing. I feel like the older people are more active on these types of sites. Like the younger generation obviously leans more towards like Twitter and Instagram. But with all that being said, Facebook obviously is in a better spot than it was just a couple weeks ago, but Zuckerberg wants to spend big money on the metaverse, and some of the investors in Facebook or Meta are skeptical of this. So he actually made a statement addressing this, pretty much just saying he will be more cautious of their spending because they didn't make as much money as they had expected to, so obviously they got to start spending less. But to be honest, I don't think he's gonna like really change that much of how him and his team spend their money. I think they're pretty set in what they want to do and knowing what they have to spend to be able to do that. So I think he's always been cautious with his money. I don't think Meta is a company that's ever been just carefree with their money, and I think the investors need to realize that the metaverse is going to be way bigger than what we can even try to fathom right now. So I think in terms of spending money to be the most successful metaverse company is going to be way worth it in the long term. And that's why I'm so excited about Meta now, is because even before like they got into all this metaverse stuff, they had a really solid business model, and I was really into them as a company. Obviously, like the ad revenue took a hit with the whole Apple situation, and to be honest, I wouldn't be nearly as excited if Facebook hadn't made this shift towards the metaverse. But with all the innovation that's going to come out over the coming years, and just how much money Facebook has on their balance sheet just in terms of cash, they're going to be able to, one, be able to test and spend however much money they really need, and at the same time they're going to be able to buy smaller companies that are having success in the space. So you got to keep in mind, like, if someone pops up and you think that they might be a big competitor, Meta can probably just buy out their company and acquire them. So obviously you saw that kind of happen with Oculus and the virtual reality space. So that was awesome, and Oculus has the highest market share out of any virtual reality headset. So I think they're going to continue to dominate that space too, even as more competitors come in and everything. Hopefully there will be more games that come out that are kind of like groundbreaking and get more people to buy these. I'm someone who, I like the idea of virtual reality, but wearing a headset and stuff is just too much for me right now. I think the same as a lot of other people when they say that augmented reality is going to have a lot of success before virtual reality. It'll be like that step in between where like we didn't go straight from house phones to iPhones. People had like normal flip phones and everything. So I think there is a step, and I think products like the Facebook glasses and like Google Glass will be able to kind of incorporate augmented reality. And then I think even in like 10-15 years, it'll be astonishing to see like where we're at. It's kind of hard to know how rapidly things will go in this metaverse AI world, but I think Meta is in a great position to capitalize on all of this, and I think Zuckerberg is one of the smartest people in the world, so I have full faith in him. And he was on the cutting edge with Facebook. He knew what the world really needed before the world knew, so I think he's in a similar position with Metaverse, and I think they've built a really good team. And yeah, even though things may not look the best for them short term, long term, I feel better than I ever have in this position. And yeah, I'm gonna keep adding shares, especially if it's under $200, because that's just kind of crazy. I think right now it's sitting at like 201 after the rise earlier this week, and then I think it kind of dropped today with the rest of the NASDAQ. And then last but not least, we've got Elon selling $8 billion worth of Tesla stock to buy Twitter. So this is pretty insane to even think about, someone just selling $8.4 billion worth of a stock, but he had to do it to be able to buy Twitter. And a lot of Tesla people are concerned about this because obviously like selling $8.4 billion worth of stock in a day can cause a drop. And yeah, just people are scared of how big of a whale Elon Musk is in his own stock of Tesla. And a lot of people think that maybe him focusing on this might cause Tesla's business model to fail because he's so focused on the Twitter, and people see it just as a distraction. And people are afraid that even if he doesn't have to keep selling stocks, that maybe he'll take money out against his stocks, and then if the price were to drop, he would end up getting margin called and therefore having to end up selling those stocks anyways. So I think he made the better decision by just going ahead and flat out selling the stocks, especially at the prices they were at. I think he kind of cashed in at a great time because Tesla was one of those stocks, kind of like Apple, that hadn't really taken a hit in the market. And Jeremy in Financial Education has had a lot of good videos about Tesla lately. So he's a Tesla holder, I'm not. So he's been able to point out some things that I definitely wouldn't have seen before. And one of them is just think about if Elon Musk, the richest man in the world, were to get margin called on his own stock. Think about how many people see Tesla as a safe tech stock. He brought up a good point of some of the biggest YouTubers like Meet Kevin are like all in on Tesla stock. Pretty much their whole portfolio of stocks is in Tesla. And it's like, how many people are like that out there? And if Elon Musk gets margin called, how many other regular investors are going to get margin called because they're all in on Tesla? So it could just be a really bad chain reaction if the stock were to drop a lot or just quickly. And for that reason, like, I'm kind of just skeptical about buying Tesla. I've always wanted to start a position in it. Right now, I feel like it's probably not the ideal time. But if we do see a big drop in Tesla, I think I'll eventually have to start a position because long term, I just don't see them having any competition. And I think Elon is obviously like a very unique individual. And I don't think we'll see another one like him. And I don't think we'll see another company like Tesla that's able to build out the infrastructure. It'd just be so ahead of competition. Obviously, more traditional stocks are getting into the EV race, but they don't really have the infrastructure, the gigafactories that Elon's been able to set up. And then like new EV companies just aren't even close, like Fisker and all these, like Rivian, just nowhere near where Tesla's at. And it's funny because Tesla has been kind of seen as this like safe haven stock, even though it has the most crazy valuation out of like any stock I could think of. And yeah, even though the market has shifted completely to like profitable businesses and businesses that are all about fundamentals, Tesla has done really, really well. So I think it might be one of those last pegs to kind of fall. And if it does, I think it might fall pretty big, and then just like a chain reaction of stuff that keeps making it fall even worse. So that's my take on Tesla. Jeremy in Financial Education, like I said, has a couple videos where he just talks about this. He lays it out a lot better than I can just because he's been in the stock market a lot longer and has a better grasp of Tesla because he's been an investor for a long time in Tesla, probably since like before I even knew what Tesla was. So definitely go check out his channel. He's someone I look up to a lot. So yeah, if you're a fan of my channel, you will definitely be a fan of his. And with that being said, thank you guys so much for watching. If you made it to this point, if you want a free stock with Robinhood or Webull, down below, click the link. And if you want some free crypto with Coinbase, click that link too. But anyways, this is it for this video, and we will see you guys next week. Have a good one.